Term life insurance is one of the most straightforward and cost-effective ways to protect your family's financial future. But even with something this simple, many people still make costly mistakes. These mistakes can leave loved ones underprotected, cause you to overpay, or even leave you without coverage when it matters most. Here are the top 5 mistakes to avoid when buying term life insurance, so you can get the right policy at the right price with complete confidence. Mistake number 1, buying too little coverage. A common mistake is underestimating how much coverage is actually needed. Maybe $100,000 sounds like a lot of money, but once you factor in a mortgage, debts, everyday living expenses, and future costs like college tuition, that amount can vanish in just a year or two. A good rule of thumb is to aim for 10 to 15 times your annual income. If you earn $60,000 a year, that means $600,000 to $900,000 in coverage. Think about how much it would take to replace your income and maintain your family's lifestyle if something happened. Mistake number 2, choosing the wrong term length. The term is simply how long your policy lasts. 10 years, 20 years, 30 years. Pick the wrong one and you either overpay or your coverage runs out too soon. Going too short might save you money now, but when the term ends, renewing will be much more expensive because you'll be older and maybe not as healthy. Choosing a term that's too long can mean paying for coverage you no longer need. The best approach is to choose a term that lasts until your biggest financial responsibilities are gone. When the kids are grown, the mortgage is paid, or your savings are large enough to cover expenses without insurance. For most people, that's 20 to 30 years. Mistake number 3, waiting years before buying. The difference isn't small, it's significant. A healthy 30-year-old might pay $25 a month for a $500,000 20-year policy. Wait until age 40, and the cost could double. By age 50, it could be 6 times higher if you even qualify. Health changes can make it worse. Even common issues like high blood pressure or weight gain can lead to higher rates or a denial. The best time to buy coverage is while you're young and healthy. The second best time is right now. Mistake number 4, failing to compare multiple quotes. Not all insurance companies charge the same price for the same coverage. One might offer $500,000 of protection for $28 a month, while another charges $45 for the exact same thing. If you only check one company, you could spend thousands more over the life of your policy. Always compare quotes, either through an online comparison tool or with an independent broker who can shop around for you. It's no different than booking a flight. You wouldn't buy the first ticket you see without checking for a better deal, and you shouldn't do it with life insurance either. Mistake number 5, canceling the policy too early. Canceling too soon can be risky. Maybe the kids move out, debts are paid, and it feels like life insurance is no longer necessary. But life can change quickly. You might take on new debt, have family members who depend on you again, or see your savings drop after a market downturn. If you need coverage later, it will be far more expensive, and you may not qualify at all. Before canceling, make sure you truly have enough assets and income to protect your family without insurance. Quick recap. To get term life insurance right, buy enough coverage to fully replace your income. Choose a term that matches your financial responsibilities. Lock in low rates early while you're healthy. Compare multiple quotes before committing. Keep coverage until you're certain you no longer need it. Term life insurance is one of the simplest ways to create long-term financial security. By avoiding these 5 mistakes, you can protect your loved ones without overpaying or leaving gaps in coverage. For more straightforward, practical tips, explore the other videos in this series. And don't forget to like and subscribe to support the channel. See you later. Goodbye.